Good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today is Thursday, and it is January 5th. And we do got a bit of economic news releases to go over today. Tomorrow will be the big one. We got the jobs reports coming out tomorrow, which will be leading the. Actually, that's the big number we're looking for this week. So let's go ahead and take a look at what we got today. We got the weekly jobless claims. So last week we had 263,000 people apply for unemployment. Forecast for this week, or this reporting, is just 260,000. And it came in at really surprisingly low, 235,000. So that came in really nice here. We're going to want to keep an eye on this to see how much this may be affected with the, seasonal jobs that we had during the holiday seasons here. A lot of times those people will go on the unemployment in January, February. Gets more reflected in there. And, we have less jobs and stuff. ADP employment came in a bit disappointing here. Back in November, we had 215,000 new jobs created, and December came in at a disappointingly low at 153. They did expect a little bit higher, like around 160. Tomorrow, they're expecting about 175,000 new jobs, and from unemployment rate to go up from 4.6 to about 4.7 tomorrow. So just to kind of give you a heads up on there. So when you see the data tomorrow morning when it's released, you'll kind of have a gauge as to what the expectations are. Market services PMI. This is a service industry kind of index. Gives us an idea how the service industry, as well as this ISM non-manufacturing, also known as ISM services. But we'll look at the market services. Anything above 50 is considered expansion. So we had a 53.4 for the initial reporting. We get two reports on both of these. We get an initial one earlier in the month, and then we get a final one. And this here is going to be the final one. So it goes from 53.4, our initial reporting, to 53.9. November was actually in the, if I remember, it might have been in the 60s. So it's a little disappointing for market services. We also got ISM non-manufacturing. This one, as you see, it maintained. It just did the same thing. Went from 57.2. Forecast is 57.1. It came in at the same number at 57.2. Now, some of this, historically, like the non-ISM services, typically is a good correlation to jobs reports. Jobs on the numbers that kind of make up this 57.2, about the jobs numbers came in, did drop down a little bit. So, but lately, the last few months, it hasn't been. The correlation hasn't been quite there. But historically speaking, there's usually a very strong correlation between the two. So tomorrow is going to be getting a lot of people confused. They're kind of wondering which way it's going to go, because are they going to wonder if, if this is a strong indicator as to the jobs tomorrow, that maybe it might come in lower than 175 they're expecting, or you got weekly jobs number that came in pretty strong. I mean, weekly jobless claims looking pretty good, drops down to 235. But then on the other hand, we get ADP, which is not usually a good correlation, but that also dropped quite a bit to 153. So tomorrow is going to kind of up in the air as to where things are at. So expect a lot of conservative maneuvering right now, especially as the stock market moved up as fast as it has. So we'll go to the headline news here. So stock market's actually down today. They're kind of positioning themselves because a lot of people are kind of sitting back and kind of thinking, okay, are we getting ahead of ourselves? Are we getting ahead of the fundamentals? Are the valuations of these stocks representative of what the fundamentals are, getting way ahead of the fundamentals? So a lot of them are kind of repositioning themselves, kind of getting cautious. You're looking at that 20,000 on the Dow. It's been a psychological level, but it's also been kind of a ceiling of resistance for them, where they can't really. It seems like they get kind of close and they pull back, get close, pull back. So this, you're starting to see a bit of a slowdown, kind of revising and kind of rethinking their positions, and want to probably see a bit more in terms of profits from stores, especially when we had Macy's also announced that they're going to close 100 stores in 2017 and cut about 10,000 jobs. So that's quite a bit of job losses that will be coming into the market over the next year here. One of the things that's helping out the mortgage-backed securities today, and I'll kind of get into it, is the New York Fed is purchasing about $2.5 billion in mortgage-backed securities today on the 3.5% and 3% Fannie Mae coupons here. So let's kind of get into it. We were up about initially with 25 basis points earlier this morning, And just as the Fed was about ready to buy mortgage-backed securities right around 8:30 Pacific Standard Time, it jumped up to about 41 basis points. So we were kind of hanging in here and then shot up over the second resistance level here. This is going to give us a nice boost. If we can close above this, this could give us a nice and stay above it. Hopefully tomorrow numbers, if it disappoints, it could help keep us above this level and see a nice little ride for continued improvement in interest rates. Of course, the stock market will suffer at the stock market. Meanwhile, also the yields on the 10-year treasuries have been kind of dropping a little bit of late too, because they also, since the election in October, have been shooting straight up at a tremendous rate as well. So you're seeing some pullback on the 10-year treasuries and global yields worldwide here. So these are different things. So to get to the point on this here, we because of the improvement here in the bond market, we're seeing an improvement in interest rates. So interest rates will be better today, better priced today. So if you guys like to get continued data or information throughout the day, just come over to Twitter. I do post on Twitter throughout the day, and you can get more information if you like. Just follow me at Mike Bjork. Have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow. We'll get the big job numbers coming in tomorrow, so be prepared for a little volatility right off the bat. Take care. Bye-bye.